Hey everyone, welcome back to my channel. Alvin here. Today's topic, some might say unachievable, some might say that it takes a long time, some might say that people in the FIRE movement, they achieve it quite early in their working years. But for me, I would say that not only that $100,000 cash, like earning or saving or investing or getting that amount of money need going forward in life. And it's not to say that you should achieve it as early as possible, which you should do it diligently, as much as you can, budgeting it towards that 100,000 milestone. One can think that 100,000 seems like a very big number, and rightfully so, it is 6 digits. But I would put it to you that for me, having that $100,000 before I was 40 really did change how I feel about money, how I feel about my life journey, how I feel about things going forward. Because 100,000, click and view all the YouTube channels, the videos that talk about 100,000, that it's going to be very easy going forward. But achieving the 100,000 is hard, and rightfully so, because again, like I say, it's a very big number. And for those that are just starting out to work, or even starting out, with the part-time pay or whatever, I urge you to see that number and aim for it. If you are like me, in my youth, I was really a spender. I did not see money as it was as a tool to get stuff. I thought it was something that once you are working, you will keep working, and having the paycheck, month after month coming in. You thought you would be safe, so you kept spending and spending and spending. For me, I was a bit lucky to share my story why I think $100,000 is needed, as soon as possible. Like I said, I was a spender. I didn't view money all that well, all that good. It was just something that I would just spend. I would just buy into CDs. Back in the day, CDs was a thing. Now, of course, it's streaming apps and everything. I will buy into albums. I will be at HMV. Back in the day, HMV and Tower Records, listening to music after school and then just buying the CDs. And those were like $20 a pop, sometimes some even $30 to $40. And that was my spending money from my youth. I wasn't even working back then. I was saving up to spend on things, frivolous things that I enjoyed and I was interested in. In a Singapore context, as one starts, working, you will have CPF. When I say $100,000, it does not include CPF. That $100,000 you have to aim for. For me, I definitely did not do that. I did not save. Saving was in my head non-existent. I just, if I actually spend down my money, I would just, go back home, eat my mom's dinner or lunch, and just wait it out and then just listen to the CDs that I bought or play the games that I bought or just, stay at home. Then when either my salary when I was working or when my mom, gave me my allowance back in the day, I would just, again, spend. But I didn't spend all at once. I will see the things that I'm interested in. Then there's, like, if it comes CD albums, you got Blink-182, you have, the Linkin Park albums, you have even the games. Luckily, in Singapore context, pirated games was a thing, so it was very cheap. But I did buy a lot of pirated games, So that was also where my money was, flushed down the toilet, so to speak. So yeah, I was spending down and not doing anything with my money. Then came another interest, which was toys. I was into figurines, and as I was working, in my day job, I was just spending and spending and spending. It can come to a point again in my bank account, it will look $0. I think I got pretty lucky because as I was spending down my salary, my toys in and out, I could sell them, because when I was buying toys, I was also looking at prices of toys, whether I can sell them if I don't wish to have them, or even, scout them. If I can buy, at a price, then I can resell it for a profit. So that was something that was in my mind. That's why I had my eBay account. Back then I was buying on the eBay platform. Then I realized that I could sell things to the other, US market or worldwide, so to speak. And that got my business economics acumen from, but that turned south, down the drain also, because I was spending more than I was saving. So, like I said, that was how I viewed money back in the day. When I got married, God knows how I did that, to be very honest. It was all again, on debt lah. We actually had to pay down our debt. When we got married, we got our renovation for our house. HDB again was paid through CPF, so that was not really a concern. But renovation, then there was the other aspects of the big ticket items. Luckily, I didn't have a car. But from what I know from myself, the turning point again was because I lost my job. I lost my job during COVID. I actually lost my job the first time, when my first job in selling toys for the company that was selling collectible toys. But that didn't really last long because I actually found another job, as a retail manager for a very big, company who's residing in Orchard Road. But then again, when I lost my job for the second time, it was during COVID. Actually, it was before COVID. Then COVID hit, and then my jobless period was extended for a while, and that really hit me hard because my bank account was close to $0. So I took it upon myself that I would change. That needed some motivation because my habits of spending was quite immense. But again, because I had a lot of toys, like really a lot of toys. So how I actually got my first 50,000 was actually through eBay. I was selling down my toys through eBay. And luckily, the economy was, for me, I was selling down the collection while people were buying stuff because of the stimulus packages that the government, the US government in particular, was giving out to the US people, and everybody had a lot of money, staying at home, and they were buying online stuff. So that was my first 50,000. You can click on this video how I, turn 50,000 in profits. That's got my first kick of money in my bank account. How I got my second 50,000 was a little bit slower. Actually, much slower. That was again the trajectory of this whole COVID, this whole 5 years. The digital banks in Singapore was a thing. Trust Bank, which was run, I think, by NTUC Income and Standard Chartered. And then GXS Bank, which was run, I think, by Grab and Singtel, if I'm not wrong. And last but not least, the later one that came later in the game was MariBank, which is run by Shopee or C Limited. These digital banks had a higher interest rate, and that got me really thinking because I didn't have a job, so I couldn't really, and then back then I wasn't really thinking of leveraging on, the banks, their interest while you are being paid in the salary, while spending credit, and all that. I was, really putting my money in DBS Bank, which was earning a measly 0.05% interest every month. I didn't really think of any other investment vehicles, not the Singapore Savings Bank, any other interest rate, because I looked at the number, it was really small, like 2%, 3%, not even 3%, 2%, 1%. So, and I wasn't even thinking of fixed deposits. So, because again, I had no money also. Then the digital banks came. So when I look at it and the interest rate of, as US, the economy, they were pushing up the interest rate because of the inflation, I actually realized that my money just being parked there can earn interest. And the interest was substantial for $50,000. That's where the first mindset change for me and for you, if you're thinking why you should aim for the $100,000, is just parking money while doing nothing and you earn interest, and the interest is pretty big by today's standard. Because yes, the Federal Reserve is actually cutting interest rate, but the interest rate comparatively to the last 4-5 years is still high. So I put it to you, you have to save as much as you can. I know it might be difficult because you are starting maybe even from zero or from a very nominal amount. Start doing the things I'm going to tell you later, and you should aim for the 100,000. As much as you can, as long as you can, you should aim for it. If you have not used any of the digital banks, which I don't know for the life of me why you shouldn't, or why you're not using, just create an account. You can click on the link below. You probably also will be looking into other investment vehicles, because just sitting on 2%, 2 point, I think it was 2.5 for Trust Bank, and then the others were 2.7 or 2.8. It was relatively high. So you would think that the other investment vehicles, because the interest rate of highs will be even higher. So that got me learning about investment. Then, of course, there was the Singapore Savings Bond, which came later in the game. That one I parking some at the 3% mark, 3.4, 3.2, 3% mark, just to buffer what I have in regards to putting my money in CPF, which for those that may be listening in, I've not myself I'm not really considered self-employed because I have my part-time job who's kind of paying CPF. But for me, to you, if you're planning to put CPF as a self-employed at this current juncture, because the interest rate is still high, I'm not considering it, but then it's all down to your preference. And then for me, being starting late in the game, I don't see the point yet. Again, that may change down the road. So for me, I was looking in, YouTube, looking at all the other finance YouTubers who, in today's context were making it, like Josh Tan, Kelvin Learns Investing, who or during this period also was popping up left, right, center, while at home, people were spending money on online, buying stuff, being bored, playing games. These go-getters were making YouTube videos, and then at this current juncture, they made it. So I was learning from Kelvin Learns Investing. He kind of jumpstart what I would presume that he meant good for the community to save more and then to earn more while making the money work more. So for me, one of the investment vehicle was chocolate finance. Chocolate Finance I started in August 2023. The interest rate is going to come down. I got in early back then was because of Kelvin Learns Investing, his referral link. Of course, as you refer someone in, you yourself will get, like, if I'm not wrong, $10, while the other party, your friend, whoever you're referring into will get. You can click the link below to find out more. I've used it for over a year now. Relatively safe. Again, it's not really backed by any government body, it's not backed by the banking side where, at least if your money's lost in a bank, you will lose all. Chocolate Finance isn't that. So you may want to think, or read through more. For me, that 20,000 that's inside now. I mean, it's lesser than that now because I use some of the money to do some other stuff. It's earning that 4.5 interest rate back in the day. Now it has dropped to 4.2 and it's going to drop even further to 3 point something because of the interest rate environment. But it's still relatively high. But of course, if I'm not mistaken now, for Chocolate Finance, they are doing less, but they're going to widen the amount from 20,000 to 50,000. So you get 3 point something percent with the 50,000. Then above that will be, it's a variation. So Chocolate Finance, and then of course, Chocolate Finance is now you can actually link your bank account, and then it's as swift as transferring like PayNow, even though it isn't. It's quick as that. That's how I'm earning interest while parking my money, doing basically nothing in Chocolate Finance. The other investment vehicles I used was MooMoo Finance and a few others, Webull. All these were through the referral links by, Demi Chuang, Kelvin Learns Investing, mostly from Kelvin, so to speak. And then a few others that, like Tiger Brokers, and a few other smaller ones like LongBridge. Why I actually opened the account with them? Because when you open an account with these newer brokers, they were giving out promotion deals. You park your money with them, it's a no-brainer, because back, I think for MooMoo Finance, you as existing users, you earn like 5.8% on a certain amount for the period, and then it comes to you. I can show you what I earn, I think it's still in the history, what I earn for that amount. And then they up their game to 6.8%, and then now there's the new one which it just ended, but we still have to park for 60 days rather than 30, even though the earning period is only for 30 days. And then of course there's a few other promotions. So what I'm telling you is, because in the Singapore context, I believe is relatively safe. I mean, of course, finance YouTubers all are doing their part to educate everyone of these, brokers, these investment vehicles, but they also do earn a referral, on it. And then if you choose to use my link, I mean, it's no obligation. It's all down below if you have never used it. I'm using it, so that's why I'm telling you that it's how I actually got to my $100,000. So brokers is one thing. Chocolate Finance is another thing. Then of course the digital banks are like, especially for MariBank, which is they have MariInvest. So if you want to use MariInvest instead of MariBank, it's a high interest rate. But I do bear in mind that on the weekends, they don't give you the interest rate. So that's how I got through my 100,000. But then you might be thinking, how do you even hit 100,000? With 50,000, there's still another 50,000 to go. That's where the three things that I love to tell you all is budgeting, saving, and investing. Your budgeting needs to come into play, and it didn't come into play after I got my first 50,000. I was selling down, my stuff I didn't really was buying into anything. That didn't really thought of doing any budgeting for that matter. But when I got my $50,000 from eBay, my eBay selling, I realized that as the eBay selling was slowing down, and you can feel it because when I'm selling the same thing that I have, that's how much stuff I have, so to speak. When I was selling down my stuff, I couldn't get a better price than I had before. And you can obviously tell the buying power is dwindling among the US consumer. And rightfully so, I also realized it. That's where I went to look for other investment vehicle. That's where I was also looking for part-time job. And then that part-time job, when I got my pick and pack, through the friend, and then the other one later down the road, it really hit me hard that I needed to figure out what was my income and what was my expenditure. And then I owe it to myself that I needed to change my habit of spending once, COVID was no longer a thing, and then bring down my expenses. Living below your means is really something that I truly believe in right now. Yes, living below your means, for me, in my opinion, does not equate to not spending on stuff. I tell you one thing, my youth days, right to now, I'm still interested in all of them. Music, games, football, figurines, toys, anime, you name it, I probably know more than anything. My interest hasn't waned all this while, even though I'm 40 this year. So when you're interested in things, you tend to buy into things. But I've already saw through myself that I needed to get it down, that I needed to budget. So that aspect of fun money comes into play because all this is like fun money. Budgeting is looking at, incoming and then expenditures which is going out. I needed to buffer my fixed costs, my fixed expenses, which is my, my food, my transport, all else like property tax, that's yearly, my electrical bills, my utilities, I'm also even paying for my mom's utilities, so that also has to be factored in. That portion, once I got it covered, all else is fair game to me. You need to figure out your expenses. How do you even do it? It's just, you have to do it on a budget. You have to do it on an Excel sheet. You have to do it on a budgeting app. I don't really care. Get it down to the nitty gritty of every single line item that you buy every month and then see where you've gone wrong. And that really helped me to fix what I believe is, in today's society, a problem, because a lot of people think that budgeting is limiting yourself. In fact, budgeting is not limiting yourself. It never is for me. It's actually figuring out that my fixed cost is this much. How I want to live my life is this much. And then all the rest is fair game. When I say fair game, you can spend it all if you want. That means you're living within your means. When I'm living below my means, I needed to save. I needed to invest. You can do a lot of different types of budgeting or saving or investing rules that's out in the market right now. For me, is I need to cover my expenditure first. Everything else, I actually save or invest. Because for me, my interest level for other things has some sort of investment value in it. When I buy Pokemon cards, for instance, I realize that investment side of thing is quite turbulent. It's quite volatile. You probably need to know why you're buying into it. Do some research, then buy into it. Then I've got my eBay business, my eBay side, income side job, where I'm actually looking at other people's collection who are selling it down and see whether I can profit from it or some, place that's, selling down at sale price, whether I can buy and then resell down the road, or even hold on to it to even invest, because you're holding on a certain longer period of time and then you hope for it to go up. That's where your years of looking at things, see the market trends and then you buy into it. So I'm using this thought process into my trading and even my investing, which is taking time, because for me to buy at a discount to sell high, I really should think of you doing it on investing side, which again, I'm still a newbie. So that's where I'm still learning. That's where this $100,000, again, coming back to it, this $100,000 is there for you to so-called play around. You don't leverage on money. You don't go borrowing money because you have this lump sum. And even if you don't have 100,000, you have a certain amount going to 100,000, correct? So I urge you, as this video is coming to 30 minutes, that's how my life journey to my first $100,000 come into play. I urge you those who have yet to reach that, to keep at it. Those who are finding it difficult to do it, use my example and this very age, this very day, how the landscape of saving and investing is, because using all the vehicles, all the platforms to help you achieve that goal will really put you in a better position. Like I said, I'm using all the digital banks at the moment. Not all, I've opened an account, but I'm mainly putting on MariBank because it has the slightly higher interest. If you have a salaried job, stick to that side of the interest part of it. And then, but of course, it's capped to a certain limit. So you can park the other, I just heard from my mom, the Singapore savings, the bond has dropped to 2.5 for this month. So it's if you think that's worthwhile, why not? That one's up to 200,000 only. Then there's chocolate finance, which is coming down in interest, but it's still relatively high. There's other investment vehicles like MooMoo, the ones I'm using, MooMoo, Tiger Brokers, LongBridge, Webull. And then there's so many others that I'm still looking into. Just if they are offering a promotion, just open an account, because it's in Singapore still not so bad lah. You can put a small amount in, money that you can afford to lose. Because while you're saving and investing all the way up, that's why I say to hit the 100,000 is quite critical as an adult in this day and age. Not even 10,000. So, but to reach there, you should do it. So from me to you, that's all I have for you. You can comment down below what are your thoughts on this matter. Why is it not achievable for you? Or why have you already achieved it and then maybe you can feel indifferent for a minute, or you feel the same or different for me? You can comment down below. I thank you all for listening to this 40-year-old for so long. I thank you all. I'll see you in the next one. Bye bye.